Okay, so I want to welcome Terry Papineau. He called the gold run up correctly. He called the tech bubble collapse correctly. He called the oil run up correctly. And now he's called the uranium run up correctly. So it's just absolutely great. I'm excited to have you on. Welcome, Terry.
Cheers. I'm happy to be back, Elliot, and hello to everybody from beautiful French River, Ontario.
So, the last time we talked, you were all in on uranium junior miners when absolutely no one wanted them. They were, you know, down, like sentiment was really, really bad. And now, obviously, congratulations, they're up over 35%, some of them, at least the ones I've looked at. So, what is your plan for this trade? Do you just want to hold it, or I mean, obviously it could change at any moment, but do you have a strategy at this point for what you're going to do with all those assets?
I do. I'd like to address that all in uranium. I have fun reading the comments on the YouTube the videos that have been made where I'm speaking, and it's fun to see people just dishing on the fact that I'm 100% uranium. That's not the right thing to do. And juniors, well, explorers is the worst thing to do. And blah, blah. But I'm pretty happy with my decision right now, where the portfolio is up probably 80% in the last 3 weeks. So that's been kind of nice. Yeah, so my strategy, I am not a trader. So a lot of people entering, you could see on social media, on Twitter, a lot of comments, even on the YouTube videos. A lot of people entering I think, are used to trading. So getting into a sector when the momentum's going up, and then trying to name the high price and then sell and then maybe get back in. And that was fairly easy to do, I guess, in the past, and it might still be easy to do now, but that's not my strategy. I wouldn't want to sell. Like yesterday was a great day, and we saw a big sell-off at the end of the day. So, last half hour, people started taking profits. My fear is that, okay, let's say I'm up, well, yesterday I was up 16% at one point, and, sell at the top, but I'm not really sure what's going to happen the next morning. Like if I want to get back in, am I going to be buying back in at higher prices? Am I going to try to time that next wave? So that's a strategy that some people use, which is fine, but that's not my strategy. My strategy is, as long as the fundamentals are still there, and they are, and as long, like, I'm fairly confident now that we're going to see the spot price in over $100. Like, I don't want to make a prediction because I don't know, but it looks pretty inevitable now that it's going to be. So why would I want to sell anything right now? Like, I'm confident of what I just said. So, when the price of uranium starts to hit certain targets, and I'll assess the companies as I go along, but my strategy will be to slowly scale out of positions. And also assess what's going on with the contracting, assess what's going on with the development of small modular reactors. As you know, that's another great catalyst moving forward. There's governments, involved in this. There are, two of the wealthiest men on the planet, Bill Gates and Warren Buffett, have teamed up with Bill Gates' company TerraPower to install a small modular reactor in Wyoming. They're going to install that where they decommission a coal plant. The infrastructure is all, it's a brilliant idea. So that's going to create more demand on uranium going forward. So yeah, I just don't see any sell signals for me at this point in time.
Wow, that's really good to know. So you're going to keep all your capital locked away in this investment for the foreseeable future until something changes, which it seems like the fundamentals won't really move very much from where they are now, at least for the next few months. So
Yeah. The other factor I'd like to consider is, I've been talking with the people that there's a little group here. We're about 45, 50 people. We share information, and the setup in uranium is not like is rare. What I mean by that is there's I can't recall any other scenario that was as good as this one ever, where it was, and it took time, obviously, but the longer it took, the better it got, and just the more convinced I was of the thesis. And so when a lot of people ask me, what's your next? I don't know. I don't know what I'm not seeing anything right now that is that presents this kind of opportunity. There's other things where, yeah, it might be a double, it might be a triple, but we're talking like 10, 20, maybe higher baggers here. And that kind of setup doesn't come along too often, where, there's very little downside risk and a huge upside risk. So, so I'm happy that, the people in our group were able to, and all of us were able to see that. And almost all of us were all 100% uranium.
Wow. Yeah. And you're comfortable being in the explorers, right?
Well, the majority of my portfolio is in explorers. That's correct. I also get a lot of flack for that.
I know. Well, it makes sense, because I mean, if this thesis is true, which it's proven to be, the explorers give you the highest alpha. So why wouldn't you want to have at least some diversified exposure to those?
Well, it's speculation. So I think, and I understand that, because they have no revenue, they have nothing. They're trying to find something in the ground, and where you can't see where you're going. So it's difficult to do. The chances of making a discovery are small. But my money is in companies that survived a brutal 10-year bear market. So what's my downside? My downside is if one of those companies, or all of them, declare bankruptcy. My downside is, and I really hope this is not going to happen, but another nuclear accident, and then all of our sector takes a beating. So, but let's explore that. They survived the major 10-year bear market, where raising capital was difficult. Just trying to keep the lights on was difficult, but they did. Not only did they survive that 10-year bear market, a lot of them really improved the company by doing a little bit more work on this project and that project, and refining the drill targets. And now we're in a bull market, where money's flowing in like nothing we've seen really. And these companies are going to go bankrupt? I don't think so. And when you compare the market cap of these companies right now with the market cap of companies in the last bull market. So I've got a report that Sprott put out in 2007, and on uranium companies, and when the price of uranium was $70, and this was an early, I could send it to you if you want. This was before early 2007, before uranium hit $139 a pound. And there's a bunch of explorers in there that have market caps in the 200, 300, $500 million market cap range, that we don't even know where they are now. They probably don't even exist. They were probably just shell companies that were formed just to ride the bull market. Some of them, I don't want to say all of them.
Right.
So, 15 years ago, explorers had market caps in the midway in the bull market of 200, 300, 400, 500 million market caps. And when I started talking, publicly about my investment strategy, we were talking about 10 million market caps, 20 million market caps. Now those companies are at 40, 50, and 70 million market caps right now. So I'm comfortable in assuming that they should be able to reach the same market caps as 15 years ago, when uranium was $70. So, my company that's sitting at, one of my company positions that's sitting at 40 million right now, I feel pretty good that they should reach a 200 million market cap. in the heart of this bull market, which is a 5-backer from here. And I've already, doubled, tripled already, maybe quadrupled. So that's been my strategy. Now, that's if they don't hit uranium.
Right.
If they do,
Yeah.
so I've got eight explorers here that in my portfolio. Will all of them hit uranium? No. But is there a good chance that one of them does hit uranium? Yes. One of them put out a news release this morning, Sky Harbor. They hit uranium. Now it's not, it's not a big intercept, but where's the best place to find uranium? Ask any uranium geologist, is where you found uranium. So that uranium is coming from somewhere. There's a deposit that fed that uranium there. So now they need to refine and maybe go drill some more and find. So out of my 7 or 8 explorers, will one of them hit uranium? I think so. They're in the best region in the world to find uranium, which is the Athabasca Basin. It's called the Saudi Arabia of uranium. So, and even if they don't, I still believe that I'll be doing reasonable returns from here.
Yeah, well, they already have, right? They're up 50. You were saying 80% just without finding uranium. And if they do find uranium, I don't even.
Most of them are up 100% since you and I spoke last time.
A big reason I'm excited to have you back is because you study this very in depth. You're in the weeds, you're in the numbers. You don't just, fly by feelings at all. You really back this up. And I know you've studied this, the current situation really well and in depth. So I think what people want to know is like, where is this market going to go? How long can this last? Is there an exit point? And you have hard data to back up what you're doing. So do you just want to start by talking about, I think your first data point is the split tracker. So would you mind just explaining what that is and how you read that?
Sure. So one of the things that we talked last time, Elliot, was the impact that Sprott, so that's Sprott Physical Uranium Trust, would have on the uranium market. And I've told a lot of people the uranium story over the years, and I always told people that I didn't know when it was going to happen, but it's a when question. Until Sprott took over Uranium Participation Corp and announced how they were going to manage the fund with an ATM, which we explained last time on your video. And at that point, I knew exactly that this was going to be the catalyst. I was absolutely sure that this was the catalyst that would start moving the spot price. And I told people, if you want to get in, basically, if you want to get in at the best prices, you better get in before early to mid-August. And that's exactly what happened. Now, however, I was surprised at the rate at which money flowed into the fund and how quickly they were able to deploy, because they applied for an at-the-market of $300 million to be able to issue shares every day, which would provide them with money to be able to buy uranium on the spot price. So basically, they've already almost in the first month liquidated the entire $300 million. And this chart basically shows their activity on a daily basis. We'll give credit to Alex Weinstein, I believe, on Twitter for providing this slide, and it shows the movement in spot price. And I think the 2 days, it was the first or second week of August, and it was a Thursday, Friday, or Wednesday, Thursday, Friday, and all of a sudden the spot price fell. It was rising, and then it went all the way back down to $30 a pound. And then the following weeks, Sprott started buying. And so they've deployed about $250 million of that $300 million that they had available. They've been buying, they've purchased about 6.6 million pounds already on the spot market. And in that period of time, they've managed to increase the price of uranium to $44.25 pounds, I believe, is where we're sitting at this morning. So that's a 48% increase in the price of spot uranium in about a month's time. And the exciting news, so maybe to go into how high can this go, how long is going to last, and nobody knows for sure. I certainly don't, and would never assume to know so. But what's interesting is that people were wondering what's going to happen when Sprott runs out of money. Well, we got our answer on Friday. what they did is they filed a new prospectus. They amended their prospectus to increase that $300 million by $1 billion. So starting maybe today, maybe tomorrow, not exactly sure on that, because there's a lag time between the time they file their revised prospectus and when they can start deploying that new money. But maybe today, tomorrow, Thursday, then they're going to start deploying the remainder of that $1 billion. So how how high can this thing go? How long will it last? Well, if they manage to move the price of uranium by 48% with 250 million, how high is it going to go with the remainder billion? And I'm truly impressed that Sprott is doing exactly what they said they were going to do. They're being aggressive. They're creating value for their shareholders, their unit holders, I should say. And a curious thing about uranium is that in the last bull market, and I imagine the same thing might happen in this one, is that the relationship between the price and the supply of uranium is kind of inverted. So, as the price is going up, you'd figure that more uranium would be available. However, what's happened in the past is the opposite has been true. When the price is going up, people, those that do have deposits or inventory, begin to look around and maybe say, okay, well, let's hold off here. We don't know how high this thing is going to go. There might be an extreme shortage of uranium at some point in time, so it becomes a little less available. And what we saw when Sprott first started to deploy their cash, we saw small increases in the price of spot. We saw like 13 cents one day, maybe 40 cents the other day. Well, now we're seeing, those moves increase. Then they went up to 50 cents at a time or 75 cents at a time. And I think Friday, it went up by $2.50 in one day. So that's kind of what I envision will happen in the coming weeks and months as Sprott begins to deploy this new $1 billion that's available to them. How high this thing is going to go, I really don't know, but it seems pretty clear now that we may break through $70 by the end of the year, and that the price is significantly going to overshoot.
Wow, unbelievable. It looks similar to the chart from, I guess, what was it, 2007, when it just went straight up. It looks like we're repeating that. And so this is just the catalyst that's kind of moving it in that parabolic way. And it's going to continue. They have $1 billion more, like you're saying, to use. So then I guess, next steps. So there's this parabolic move, this massive rush and frenzy for the spot price. But then looking a little further out, what are some other drivers that could even sustain it further than just kind of a quick spike?
Well, I think it might be worth our time to take a look at the World Nuclear Association, their supply demand model. And that came out, they come out with this model every 2 years. That came out about last week or the week before.
Yeah, this is an absolutely great chart. So just so people know, the black line at the top is the reactor requirements. So that's the demand. And then the bars are the supply. And this doesn't include investment demand, right? In Sprott?
I'm not sure what you mean by investment demand.
Well, so the demand for physical, for the ETF to buy physical uranium.
Yeah, no, that's right. That's right. This scenario does not include, this is just production and consumption. So it doesn't include, reserves or secondary supply that has already been mined that would be available to them. It doesn't show the effect that Sprott is buying up this inventory that's available at this moment. The thing also to remember is that you can't click a finger and produce a pile of uranium on your front lawn here. These finally, we're seeing exactly how much inventory is out there. All of this talk, all of these bearish predictions that there's millions and billions of pounds available, and that Kazakhstan is going to ramp up production and Russia is going to ramp up production, and are simply they may have been valid arguments 5 years ago, but not anymore.
Well, it's just incredible because this is the World Nuclear Association, and they're saying, once we bring on prospective mines out into 2030, 2040, there's still going to be this incredible gap, and it's just going to keep growing and growing and growing. So they're kind of acknowledging that there isn't enough supply, period, for the next 10, 15 years.
That's exactly what this chart is showing. Yeah. And my interpretation of it is that it might not be this year, but utilities, this problem needs to be addressed like ASAP, because these new projects. So sure, you've got MacArthur River that's been on care and maintenance. You've got Langer Heinrich that can come back online. You probably have production from Energy Fuels that can be turned on fairly quickly. There might be other developers or past producers or new producers that could bring production on fairly quickly. When I say fairly quickly, I'm saying maybe in the next 2 to 3 years. But beyond that, you're going to need new mines, and there's a lot of money that needs to be spent on these new projects. They need to be funded, and these developers are going to want to sign contracts at a time when utilities are going to be desperate, and the developers will need to see a proper price to pay for the project, to pay for the financing, to pay for and to provide them with a profit. None of these companies exist to do utilities a favor. They exist to make profit for their shareholders. So it's pretty compelling.
Exactly. And just another thing that stands out to me is just that. So there's that big pink area, meaning there's a deficit between what's being produced and what's being consumed. And that doesn't get fixed until 2025, which means that there's going to be this deficit. And, if you factor in investor demand through the Sprott ETF, it's going to take a while for it to equalize, essentially, right? So it's probably going to be sustained higher.
Yeah. So in the short term, right, there's no bid panic. Like, there's only 25% of contracts that have rolled off for utilities. And I mean, their inventories, the U.S. inventories are about at 2 years consumption right now. But if there's another supply disruption for whatever reason, or if they allow their contracts to run out without recontracting, which I just can't see happening. So all of that dark red is what's available and what would need to be consumed. If you don't have uranium coming in, and all of the excess material, well, Sputt's buying it up. Sputt's going to gobble it up. So there's a crisis looming on the horizon here, and so some people were kind of upset with the new model for different reasons, because it might not be screaming right away, danger, but when you actually analyze it, you'll notice that in 2020, the supply is down, and that we know that's COVID related. We also know, so they're projecting that it's going to be down again for 2021. We don't exactly know what world supply will be this year, but we know that it's going to be down. It might not be down as much as last year. And what it shows is that there's that kind of like dark pink color that shows that there's not enough supply coming from producers and secondary supply right now. So that dark red used to be called unspecified supply on the previous chart, and they changed that now to commercial inventories. So what it's basically sort of, which is my interpretation, saying is that a utility that doesn't have contract right now to receive uranium or wants to buy more uranium, well, not who wants to buy more uranium, who wants to that wants to consume uranium but doesn't have uranium coming in under contract, they need to be going through their stockpiles right now. So I don't believe that there's a lot of utilities that are uncovered right now. As a matter of fact, we'll get into that in a second, but 2021, there's information that shows that 25% of the world's utilities, nuclear reactors, the contracts start rolling off in 2021. So, but those utilities may already have signed contracts either this year or last year. We know that Cameco did announce last year that they added pounds to the contract book. And I think they alluded to the fact that they did that this year as well. Their conference call in November is going to be very interesting. But to go back to the WNA report, you see that it appears as though starting around 2025, production resumes. So that yellow line is restarted idle mines. So that by 2024, 2025, production resumes. And that for a period of about, 3 years there, production is going to meet demand. So at first glance, this doesn't look that bad. You know, there's no real supply shortage, but let's analyze this further. So that idled supply in 2024 is probably Cameco bringing McArthur River back online. We know it's the world's largest uranium. It can produce 18 to 20 million pounds a year. It's been on care and maintenance now, permanent care and maintenance since 2018. And so here we are at the end of 2021. Cameco has stated that they will not bring that mine back online until they have homes for those pounds. In other words, until they've signed enough contracts to be able to, so that the pounds that they produce are not going to be sitting in stockpiles somewhere. They're under contract and they'll be shipped to a utility somewhere. So let's say they do, restart in 2024. Here we are just on the doorstep of 2022. Well, anyone that knows anything about uranium mining knows that the challenges when they bring McArthur River back online will be numerous. All of that workforce is gone. We're seeing major issues with supply chains. So they're going to have challenges there. And we know that it's going to take them probably a year to 18 months to 24 months before they can bring the mine fully back online. But another thing that people forget is that, let's say, for example, like they predict here, that in 2025, they are back to full production. Well, the other thing you have to remember is that once yellowcake is out, is above ground, then it needs to be converted. Then it needs to be enriched. Then it needs to be fabricated in fuel rods. So that fabrication process, the fuel cycle process itself is 12 to 18 months. So, if they do manage to come back full production 2025, that means that, that those fuel rods and might only be able to be shipped and used by 2026. So basically what we're seeing here is that they're playing with fire. So, if 25% of contracts come offline this year, and then that number increases next year and the year after that, well, once a contract is written, you have to expect that it might be now a minimum of 2 years before you can receive your fuel assembly. So that's bringing us very, very close to 2028, where 2028 on, we have a big problem. We don't have enough capacity, and the demand keeps rising, and so new production needs to come online. So by 2028, let's say, to be able to meet that increasing demand. So if you look out by 2040, the spread between the capacity, the production, and the demand is huge. And we also have to remember that some of these mines don't have infinite, reserves. There's talk out there that Cigar Lake, Cameco's other large mine, which also produces 18 million pounds a year, might be depleted by the end of the century. I'm not exactly sure about that, but there is talk of that. There's also talk about a phase 2 at Cigar Lake, but that's not, a certainty either. So new production needs to come online. So this is sort of indicating to us that, there is a problem, and the utilities have sort of refused to see this for quite some time now, or to acknowledge it, even though they've been told that this problem exists. And the reason why is because they had access to cheap uranium, like for the past 5, 6, 7 years. So they didn't have to sign those contracts. They were able to, we need 100,000 pounds here, 300, 500,000 pounds there. They were doing business with carry traders that were able to secure those pounds. Well, there's a new kid on the block, and that new kid's name is Sprott, and Sprott is gobbling up all the uranium. So it's looking very promising.
Obviously just really, really incredible information if you're an investor or potential investor. And then you have this other data point, which has to do with contracts. So it's an even further kind of fundamental driver for the uranium price, if you want to talk about that.
Yeah. So utilities typically don't buy uranium in the spot price for a couple of reasons. The first is their main goal is security of supply. So, they wouldn't, contract with just one producer in just one area of the world to meet all of their uranium, their fuel needs. They would probably write contracts with a variety of producers in different geographic locations. And so they write contracts when there's an appearance, or when there seems that a shortage is going to occur. So in the last bull market, the world's two largest mines, which belong to Cameco, which are McArthur River and Cigar Lake, they operate in the Athabasca Basin, which is like a big bathtub with sand and rocks and water in the bottom. And the uranium is found kind of on the bottom where the water is. So it's complicated to mine there. And they actually have to freeze the walls of the mine so that water can't come in. And this was kind of new technology back then. And those two mines flooded. So that sent, utilities in a frenzy. Smart people noticed that there would be a uranium squeeze, so they did what's like basically what we're seeing now. They started buying, hedge funds started buying uranium. So they wrote a lot of contracts back then, and then that tapered off. Price of uranium tapered off, and then in 2010. China announced that they signed $1 billion contract to buy uranium. So that sent the price going back up again. There was more interest. So it had gone down to about $50. Then 2011 went back up to 70. They started contracting again. And these contracts are for 5, 6, 7, 8, for many years forward. So now those contracts, those legacy contracts, have started to roll off. And 25% of those contracts are rolling off in 2021. 75% of them will be gone by 2025. So unless uranium utilities can make uranium appear out of thin air, and they want to continue operating their $1 billion nuclear plant, they're going to need to secure supply again. So that's what we were talking about, entering into a new contract cycle. And also what they sometimes do, and what may occur this time again is that they may actually contract for more than their needs. So they might actually contract to rebuild some of their inventories, because down to 2 years is cutting it. I don't think they want to go down to that. So they might want to hold maybe 3 years worth of inventory. So that means that they contract for actually more than what they need, which would create a demand more than the actual consumption of $180 million, 180 million pounds per year. The total amount contracted might be for 190 million pounds per year, 100 or 200 million pounds per year. So adding more demand on uranium on a go forward basis.
Yeah, it makes sense. So they're going to want to rebuild their inventories. They will want to rebuild it for more than 2 years. And that is not, I don't think, built into that reactor requirement line that we looked at, right? So
That's correct. And so
yeah.
when you see, and these guys will know, when you look at the projections of supply demand, when you see that big a gap between, you're going to want probably an inventory more than your minimum.
Right. So they're going to want more than their bare minimum, which is all that line, that demand line shows. Just another incredible driver of demand. So is there anything else? Well, where can people go to find you, first of all?
Well, I'm active on Twitter. Some people have reached out to me through direct messaging, but that's starting to get a little bit busy right now. I've been getting quite a bit of messages in the past 2 weeks, ever since this thing has been really taking off. But most of the time, I take time to answer questions if I can.
Great. So we'll look for you on Twitter. Is there anything else you want to add, or do you want to wait, a few months and we'll have another update?
That'd be fun.
Yeah.
That'd be really fun. So I think in the meantime, let's just enjoy the show.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.